Hello, ladies and gentlemen. This is Moaz, and today we will be talking about something called inflation, as I promised in my last video. And just before we start, a little bit of a reminder that a little like, share, and subscribe doesn't hurt, it only helps. So, in easy words, inflation is basically the rise in the price of things, or this can be translated into the decline of the value of money or the purchase price of money, whatever you call it. So, there are three types of inflation. So, let's start with number one, which is demand pull inflation. Now, what's that? That's basically, when governments print money, well, it's mostly digital these days. Like, for example, there's a lot of money printed during the COVID pandemic to help people and stuff. That's why we see so much inflation. But how does that work? So the government decides, okay, the economy needs money. We need more money to print. So the government goes on and starts printing money, which is done in various ways, like buying bonds or quantitative easing. Let's not get into the details of how it's done. But what that essentially does is it pushes a lot of money into the economy, a lot of dollars into the economy, or whatever the local currency is. So when that money goes into the economy, it generally increases the amount of money in the economy. That makes things expensive. Now, how does that happen? Let's break it down, make it easy for everyone. So it goes, for example, money goes into a bank's balance sheet or a person's account. Now they have more purchasing power, so to say, so they can buy more things. So they go out and bid on a house that was like $800,000, and they say, I want to buy this house for $1 million because I have more money now, right? So they start competing with other buyers, and one guy says, "Oh, I'll do 1.2 million," and so to say that things are getting more expensive because they can afford more expensive things, so to say. But then the things generally become more expensive, and that pushes inflation in everything to the next level. This is sort of what's happening these days throughout the world because of the excessive printing of money by the United States Fed, which is copied by banks around the world, which wasn't that good because the impact of the pandemic on the economies wasn't as extreme as the governments initially thought it would be. So, here we are. So this is, the demand pull inflation, where the demand is created by the excess amount of money in the industry or the economy. And that, makes a high amount of demand for the same amount of goods and services. Because you think about it, in an industry or an economy, the amount of goods and services will, essentially be the same. It'll increase only by whatever um, you know the increase is in those services, by like new businesses, new industries, new people starting to build new things. But that wouldn't be increased dramatically by just increasing the supply of money. There's more money, but the same amount of stuff. So there'll be more competition for that stuff, making things more expensive. So that's the first type of inflation. The second type of inflation is cost plus inflation. Now, what this is, for example, if you want to sell something, you generally want to sell it for a profit, right? Now, the things that you want to sell have a manufacturing cost involved, cost of goods sold. That will be oil, minerals, whatever, but you got to pay for it. So when there's excessive supply of money to the economy, that makes those things more expensive, and you have to buy those things to, manufacture your product. Now, because they're expensive, your margins go down and you make less profit. So now you have to, increase your price to maintain your profit or increase it. Now, when you do that, things become expensive, and that contributes to inflation because things are now more expensive for the economy or people, customers. Now, that contributes to inflation because you had to do it because your cost was increased. Generally, when this kind of things happens, the first thing to increase is the price of oil, and it is a common denominator because it's a cost of transport. It's used in a lot of it's used to produce a lot of stuff as well. So that kind of contributes to it. But that's how cost plus inflation generally works. The third type is expectation inflation or built in inflation, as it's sometimes referred to. What that is basically, so, if your salary is increased by 2% from last year, you will expect it to increase by at least 2% next year as well. In the same way, if you have a business and your sales increased by 5% last year, you will expect it to increase by at least 5% in the future as well. Now, that's how the world generally works. This kind of inflation was always there and will remain there kind of as well. Because this is just a kind of a expectation that people have. You would want your house price to rise a certain percent in the next year or a few years. It's just an expectation, and that expectation becomes a reality when it's widely shared, kind of thing. Yeah, so that's one type of inflation as well. And please do understand that inflation is a concept as old as money itself. There is a dark side of inflation as well. It's called hyperinflation. Maybe you've heard of that or not. What hyperinflation is basically you just keep on printing money. You're like, oh, you need money? Here you go. Money, 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 money. You're just printing money. And essentially, the amount of goods and services in the economy hasn't risen to as much as you printed money. So prices become volatile, and your currency declines in value so much that you can't buy anything. You can't import stuff. Your exports are, all over the place. This is probably you've heard about it happening in Venezuela. It's sort of something that happens in Germany one back in the day where the mark, German mark, I think it was called, fell by more than 50% in a month. This is possible, and this can happen if the governments are not responsible in how much money they print, because then, you know, you go, okay, put it this way, you go and buy eggs in the morning, and they're 500, whatever your currency is, and in the afternoon they're 1,000, so double in price, for example. And then how can you afford to live in this kind of country? How can you do stable business where you don't even know what the price is going to be tomorrow? So we need to understand that inflation may be good, but hyperinflation in an economy can destroy the economy if the governments are not responsible in how much money they print. Because such a high amount of supply of money will just kill its value. Demand and supply, basic concept of economics. So that's how hyperinflation works. I remember I used to ask my dad back in the day, why don't we just print money and give it to everyone in the world? All the poor people, we wouldn't have the issue of poverty anymore. And he used to smile at me. But now I understand that that wasn't possible, because if we do that, that will lead to hyperinflation. And then in that case, everyone will be worse off. Now, how is inflation calculated or estimated? So you take the prices of certain things in a basket of certain things. It's called the CPI index. So you do that. There's a slight variation of how different countries do it, but it's pretty similar. And then that way you estimate how much prices have increased quarter on quarter or year on year. And that way you kind of estimate how expensive things are becoming due to inflation. And this is very important in economics. We talk about this in the bank every week as well. The reason it's important is because that influences a lot of things. It tells us a lot of things as well about consumer sentiment and things like that. But in short, that's how inflation is estimated. So what if inflation keeps on hiking but incomes don't increase as much? That creates a cost of living issue for people, because things are getting expensive. Your income's not increasing as much. How are you going to survive? This is a big issue these days in developing countries who don't have a lot of experts because they're not making enough money, but the things that they import or buy are getting expensive. So their quality of life is being squeezed. In a lot of countries, you'll see that around the world. Um, so that is an issue, and that will remain an issue unless their incomes increase more than their expenses. Now, please do understand that there's no financial advice in this video. It's just talking about interesting things such as inflation today in economics. These are, I think, are important things to understand for every one of us because we live in the same world. But please, this is not any kind of advice, and please, when you make any investment decision or anything, think about it, analyze it. Don't go on anyone's words. This is not any kind of financial advice. The second thing I wanted to talk about is hedging. So a lot of people, when these kind of inflation is rampant around the world, understand that things rise up in value. Assets such as houses, gold, things like that go up because the money is going down in value. Now, what this does is if you own a lot of assets, you become richer because your assets go up in value. You're saying, I'm making a lot of money. But if you do not own any kind of assets, you own an asset called cash, which is declining in value because it is going up in supply. Now, understand that you will become poorer every day. Some people refer to it as an invisible tax. Now, why do they do it? Now, let me explain to you. This is a very interesting thing. If a government official comes to you and say, Martin, you're making a lot of money. I want more money from you. 20% more excessive tax on you. You'll be like, man, get lost, right? Because why would you pay extra tax than everyone else? You're already paying like 47% tax or something. So the governments can't do that. So what they do instead is print money. And what printing money will do is decrease the value of your money. So technically you've lost money, but it's an invisible tax. So you don't even know that you've paid it. But if that money was in gold or assets, you can't just print more gold or more assets. It will go up in value. This is one of the reasons why some of the cryptocurrencies are gaining so much interest as well. So it is a kind of a hedge. You use different kind of hedges to try and offset the effect of inflation. Whether they are a hedge or not is subject to interpretation because of a lot of things move in different ways. So, things that hedging is not that simple. Just understand that. But just understand generally how these things work as well. Now, gold has been called a store of value as well as a hedge against inflation for thousands of years. Unfortunately, there's not enough gold to go around the world for every transaction to happen. But it's still, I think, in a lot of cultures used as a hedge against inflation. Now, what happens if accidentally a government makes a wrong decision and a lot of money goes into the economy? The inflation just becomes a huge issue. Well, that's something that's happening at the moment in the world. But what do you do then? Well, then you have to restrict the supply of money. You have to make changes to your monetary policy. Now, how this works is a very detailed topic. What governments do, well, a lot of governments are actually doing that. One thing is they just increase interest rates, and that does a lot. But how that does it and how that affects things, I think this is a topic for another video because I don't want to make this video too long. But just understand this, that governments do, or state banks or reserve banks do have steps they can take to control inflation. That only works to a certain extent, though. It's not a magic wand that can always be used after printing $1 trillion. That's not how it works. It's something that has its limitations. We will go into that at a future video. There are some people who have written about it extensively. It's a topic of debate in state banks all around the world, but it's not that easy to understand. So we'll go into that at a future video as well, how that works. But I hope this video has been able to explain to you the general concept around inflation, what it is, and why things get expensive and how does it work eventually, how do you control it, kind of thing. If you have any questions or if I've skipped or forgot something, please let me know. Put it in the comments below. I'll definitely get back to you. And please be open with liking and sharing and subscribing. That's how we can reach more people and just talk about different things as well. One other thing I wanted to quickly touch on was the fact that if you wanted to me to talk about something, whether about the finance, even accounting, or the economy at large. I love these topics. I'll even do some research for you as well if you want. Just leave a comment. Let me know what you want to know about, and I'll definitely do a video on that one. Also, thank you so much for your time. Time is a commodity which is rare in nature. You've given me time. And enjoy your day or night, whatever it is in your country, and take care of yourself. We'll see you in the next video.